Good morning and welcome, everybody. We are back to another market open. It is August 17th, 2023, 9:20 a.m., and we have a very, very special guest joining the live stream at around 9:45. Miss Gunjan Banerjee, Wall Street Journal reporter extraordinaire, will be here to bless us with her presence on the live stream. So super excited. It's going to be fun to get to talk to her for a bit. Now, we got a lot of stuff going on in the actual markets as well. We have Walmart earnings, which were very indicative of where the consumer is going. We have some new updates on inflation. And we have some general macro trends around where housing is going that I wanted to talk about because that's going to play a big role into inflation. Invest GB, Crossroads, Sam Chan, Mike Rose, Jubei, Joseph, Jeremy, Technical Trader Wong, Diane, Kevin, Miami Ren, Jubei, Seth Roth, Dan, Philip Rizzo, Tom Brady, Hakoon, Kevin, Justin, AJ, Shintoki, Amir, JB, Sam, Bodan, Zelena, Paul, Jared, David, Felicia, Persian, Prince, Hakoon, Stein, Sound, Umang, Sonam, Testcap. Thank you all for being here today. I really appreciate you all being here today out of all days because you know who we've got coming on live today. So this is a big one for you guys to be here today. Thank you for you all being here. So let's open up what we've got going on in some of the markets. We've got a little bit of recovery from some of the red that we've been seeing over the past couple of days. I am still in the belief that we are headed towards a 10% correction, and that is totally normal. Tesla is up in the pre-markets. Truist, some regionals are up in the pre-markets. Palantir also at 1555, I think, is up in the pre-markets as well, 1552. Look, I think the 10% correction is coming. I think it's totally reasonable. August and September are going to be choppy. They're supposed to be choppy, and quite frankly, we should want them to be choppy because we've got a lot of money on the sidelines. And I think as of yesterday, $5.5 trillion on the sidelines. The way for that money to get back into the markets is for them to feel they can get a better yield on stocks and equities than bonds. And when bonds are giving you 5%, look, it's tough to put your money in stocks. Bonds are risk-free. And if there's no risk and you're getting results from bonds, then that's ultimately a good thing. So at the end of the day, I think there's going to need to be some pain before we see some gain. And that's just something we all have to deal with. But at the end of the day, I think we're still headed in the right direction when it comes to inflation. Here was Walmart's earnings. Let me share this real quick. And then I want to talk about some new updated data we got on Robinhood as well. So this is the information we got from Walmart. Earnings per share, $1.84 versus $1.71 expected. Revenue, $161 billion versus $160. Their net income up 33%. I mean, that's incredible to increase your profit 33% year over year, $7.89 billion versus $5.15 billion. Why does this matter? Well, this means the consumer is strong. We saw this with Target earnings yesterday. Target slightly missed on revenue, but they beat on everything else. Walmart also raised their guidance. This is incredibly important because Walmart and Target are basically super centers in America. People come there to buy everything. If their earnings tank the bed, that means the consumer is not spending. That means there is not economic activity going on. And that means GDP growth, which is already mildly conservative in terms of where we have estimates for, is definitely not going to meet expectations. So Walmart's earnings coming in were really good for the overall market. I think that gave a little boost in the market because just of how big a company Walmart is. Currently, Walmart market cap $428 billion. It's up 0.62% in the pre-market. Walmart's not a real big mover, and 2022 was the first time it fell 10% in a day. So that lets you know how volatile 2022 was for a company like Walmart, which is one of the most stable stocks in the world, to fall down 10% in a day. The consumer was just not strong in 2022. We also got some here's one thing as well. The fear and greed index is now neutral. So we were at extremely greedy at around an 88 level about 3 weeks ago, around July 31st. Now we're at a 52. We're also going to talk about the Fed FOMC meeting minutes. There was some important stuff to talk about right there. So right now we're at a 52. We're at a neutral sentiment. I want to see this to go to fear before I think we have a time to run again. And so when that happens, we're going to be in a much better situation. Now, here's the big news for Robinhood shareholder investors. This was very important. For those that don't know, Robinhood puts out monthly data along with quarterly data. I don't know exactly why they do this. I guess this is just one of the things that they want to do for shareholders. But regardless, it's really good as a shareholder to understand. Last time they put out their monthly data, we saw their MAUs go down. So most of us who were shareholders expected during the earnings that their MAUs are going to go down. And we were correct about this. Now, look at what happens. They added 50,000 new accounts in the month of July. So now they have 23.2 million net funded accounts, and monthly active users are up to 11 million. So they had 10.8 million for the quarter last in Q2. Now it's at 11 million. So if that sustains itself through August and September, we will be up 200,000 monthly active users. And August and September are going to be choppy. So we'll see if people continue to trade. But overall, the MAU growth is back to at least a little bit normal for the month of July. Assets under custody, which is one of the most important metrics for Robinhood. It determines everything that they're able to do because they are literally getting, it literally determines how much cash they have to be able to spend, was 94.5 billion, up 6% from June 2023. That's not bad. Sequentially being up 6% is not bad at all. Net deposits were 1.4 billion in July, translating to a 19% annualized growth rate. Over the last 12 months, net deposits were 16.8 billion, meaning they get 23% every single year. 1.4 billion just in July. That's another $1.5 billion they have to put into treasury bills, to put here, to put there, whatever they want to be able to do. Trading volumes in July were also high for equities and crypto, lower for options. So equity notional trading volumes were about 69 billion. Options were about 106 million. Crypto was about 3.4 billion. So crypto and equities are up, options are down, which is okay. Margin balances were normalizing. Cash sweep balances also were up about $800 million at the end of June 2023. So if you're a Robinhood shareholder, the July data was really good. As long as that continues into August and September, then we're going to see something. Then we're going to hopefully see a pretty good earnings along with them being GAAP profitable. Transaction volume value, correct. Transaction volume as well. And a reminder to the peeps, Hood is GAAP profitable and buying back their Morbund FTX shares. This is also very important. FTX, Sam Bankman-Fried, who's now in a really shitty jail in Brooklyn. So that's an interesting story. He took 7% of Robinhood, about 55 million shares. And so obviously when he went to jail, those shares have to go back to, I think they're in Fidelity right now. So Robinhood's going to buy up a little bit of those. And if Robinhood drops to $9, I would like them to try to get them as cheap as possible. Now, here's one thing that I think is really important. Meet Kevin tweeted this yesterday. And I thought this was a really, really great summary of the Fed FOMC meeting. So I actually want to read this because I think he had one of the best takes on what we saw from the meeting notes. High level overview, the meeting notes were very hawkish, but I think they were trying to be hawkish for a reason. So Kevin says, the Fed knows deflation is rampant and happening. Supply chains are stabilizing to stable, and commodities have a low risk of skyrocketing, especially everything we're seeing in China. Commodities are the inflation to worry about. That there is no inflation to worry about when it comes to commodities. But too many still think inflation will rebound. Why is he correct about this? Because you're getting a 5% bond from treasury yields. So that still means there is a certain segment of the population that feels inflation will rebound, which is why they're not putting their money into equities, which is why you're getting the yields you're getting from the bonds. So the Fed has to crush that sentiment to avoid 1974. So he says, remember in the 1970s, the Fed failed to control inflation expectations. Unanchored inflation expectations led to a rapid rise in inflation, which hit over 18% by the late 70s, early 80s. This led to Paul Volcker having to raise interest rates to 20%. This created substantial pain, but finally restored the Fed's credibility. So we were tampering inflation by 1970. Then we failed to tamper it. The sentiment kind of went to shit. And then inflation came back at roaring rates. Paul Volcker had to ultimately raise interest rates to 20% just to give the Fed their credibility. The Fed appears convinced they've won on inflation. However, they are delaying the celebration until everyone else is also convinced. And I thought that was the most important takeaway from the Fed FOMC meetings. Minutes that came out yesterday. That unfortunately risks the Fed may overdo how long they remain elevated, which could create additional and substantial market stress or break something like a black swan event. The FOMC meetings show this fear and show how much of disinflation expected is still ahead of us over the next 6 months. He also says, keep in mind, China's economic woes could keep a substantial lid on commodity prices, keep supply chains loose, and potentially lead to commodity deflation given all the stuff that's going on in China. He also makes a point, I didn't even know this, oil is down 5%. If you look at Brent futures, they're down, or Brent crude oil, they are down 5% over the past week. So the core thesis from the Fed FOMC meeting minutes were, look, the Fed kind of knows inflation's coming down, but they can't say that they know it's coming down. They have to remain hawkish because if the market starts to feel inflation's actually under control, ironically, the market might end up going higher, which is not good for inflation right now. And so I think actually the Fed FOMC meetings were bullish, just in a different way. And we're going to have to go through some pain until we can ultimately resolve it. We don't want a 1980s Paul Volcker type of situation either as well. The Fed winning on inflation means they are pleased with the way the dollar is wrecking everything else. That is also true in the context of the Fed. But, it is what it is. And ultimately, as long as we don't get to 1980, then I think it'll be a win for us. All right, here we go. August 17, 2023, 9:30 a.m. We will have Ms. Gunjan Banerjee hopefully join us at around 9:45. So we got 15 minutes until that happens. Until then, the market is now open. Wake your ass up. Here we go. Walmart at $160, up 1.04%. Palantir 1540 down 0.39% for the day. SoFi, $8.32 up 0.82%. Target at 128. Tesla, 226 up 0.22%. Bank of America, $29.41 up 0.48%. Truist is up a little bit. S&P 500 at 441. Nvidia at 440. Home Depot at 333. We're seeing some of the big box retailers get a little bit of a boost because of what happened to Walmart. Apple at 177, pretty much flat from yesterday. JP Morgan is up. PacWest is up. Zions is up. KeyBank is up. So the regional banks are not up substantially, but they are green, which maybe we're seeing a little bit of a floor to all the red from the Moody's downgrades that we saw at the beginning of the week. Enphase at 132, Robinhood at $10.23, Intuit at 496, PayPal still just getting hammered. I thought you think when the market's a little green, PayPal will get some love. PayPal now at $58.74, Coinbase at 77. I'm confused why Coinbase is down. Coinbase was up a couple days ago on the crypto future stuff, but Coinbase is down. Snowflake 150, Meta falling below 300. We haven't seen it at 293. Meta is now in the 290s, not at the 300 level anymore. Snowflake at 150. DNA. Kathy Wood bought another 189,000 shares of Ginkgo Bioworks. A lot of people have been saying Accelera, ticker symbol ABCL, a Peter Thiel-backed company, is better than Ginkgo and has a similar business model. I tend to agree, especially in the context of valuation. However, someone or something in ARK's research team is like goo goo gaga over DNA because they cannot stop buying this stock. And so, I mean, it just forces you to look a little bit more deeper in terms of what do they see. And I've researched Ginkgo enough. The valuation is still stupid. It's not a good valuation, but I don't know. Maybe the potential they see is big there. Google at 130, Amazon 135, Mercado Libre at 1251. This is right back exactly to the June 2023 price that Mercado Libre was at, because I was looking at this back in June. It went to about 1,400, now back down to 1,248. Disney at 86, Hims at $7.10, Baba at 91 bucks. We've overall got a pretty mixed market. We're either slightly red, Palantir down 1%, Walmart down just a little bit, SoFi up 839, or we're a little green. Tesla now giving back some of its gains, now down at $224, up 0.69%. I want to share some price target upgrades for SoFi that I tweeted last night that also shows how much ridiculousness is going on with SoFi's price. I mean, the market's not going to let it go up right now because this is just not the time for SoFi, but everyone kind of knows that SoFi is going to be able to get to where it needs to get. So here we go. Mizuho Securities raised it from 9 to 15. Citigroup raised it yesterday from 10 to 12. Credit Suisse raised it from 7 to 9.5. Goldman Sachs from 6.5 to 7. BTIG raised it from 13 to 14. And Truist raised it from 11 to 16. To 16 from 11. So, yeah, I mean, everyone kind of knows that it is happening. It's just the question of when it's going to happen. And when it happens is when we're going to see a little bit more upside potential in the context of SoFi. But for now, the market's not going to give it the momentum that it needs to be able to get. And so that's kind of where we're seeing there. So again, we had Walmart earnings today. That's the only major earnings we had. NVIDIA earnings is on August 23rd. So we're getting ready for that. There was a bank, I forgot the name of it, but they raised their price target to $800 for NVIDIA. So either they're trying to get some exit liquidity, or they genuinely believe NVIDIA should be a $2 trillion company doing about $50 billion in revenue, less than $50 billion in revenue. I mean, I guess we will ultimately see where it goes from there. Let me pull up Disney and Apple real quick. Dan Ives, our friend, had a really interesting take yesterday. I want to know what everyone thinks about this in the chat. Dan Ives said that Apple should buy ESPN, not Disney, but ESPN. And it kind of makes sense given Bob Iger didn't strike down the possibility for any types of acquisitions on the earnings call yesterday. Now, why did he say they should buy ESPN? Apple already has the rights to Messi and the soccer league that he's part of in Miami. So that kind of makes a little bit of sense. Apple needs a crap ton of content. Live sports content is the content that people actually want to consume, right? You don't have to take a bet if like Stranger Things is going to resonate with an audience. By the way, I still haven't watched Stranger Things ever. I just never found too much excitement in it. But if you have live sports, I mean, you have dedicated fan bases across the entire world that are going to be able to watch those sports. So it actually does make sense. I think they would have to pay like 20, 30 billion bucks. ESPN is, if you go on your iPhone, ESPN is one of those top 4 websites that's on default on the iPhone. Like, it is a pretty big platform in regards to how much attention it captures. So Apple buying ESPN would be very interesting. I would love that for Apple. I mean, that would be a new growth sector for Apple, and they would finally make an acquisition that makes sense because they haven't made any acquisitions that truly made sense over a long time. For Disney, I wouldn't like that because ESPN is huge for Disney. For them to sell that off as one of their core assets, they would be taking a major bet on Disney Plus and Hotstar and Hulu, which you could, but I mean, ESPN to me would make A lot more expense. Sports content is never watched again, overestimated. I think the sports talk shows are definitely overestimated because like anyone on YouTube can create a sports podcast, but the sports actual live like shows like basketball, football, etc. I think that stuff will definitely still be able to get an audience. I literally only subscribe to streaming services because they have the right to sports. Yep, makes sense. That's how Fubo, I think, actually got a little bit of their subscribers because they had some sports rights and they got a bunch of people to come into the ecosystem because of that. Bro has not watched anything. No, I watched You. Okay, You on Netflix, phenomenal. Even though the last season was a little but you was a good one. So I like that one. Okay, let's take a look at a little bit of the reason for why bond yields are so high right now. I thought this was actually a very good the context of why people are not putting their money into equities and they're still putting their money into bonds. Here we go. Hey, Amit, would you do my podcast? Yes. ADJ, message me on Twitter at Amit is Investing and we'll set it up.
Looking for some direction after those July minutes yesterday. Here with more insight. Let's give us some direction. David Balin is Citi Global Wealth's Chief Investment Officer. It's great to have you here. Welcome.
Thank you.
A lot of people saying those minutes were kind of surprisingly hawkish. Was that your read?
Yeah, that is my read, and that's why the bond market is reacting, the way it is. But the bond market's also presenting us with an incredible opportunity because the minutes are looking backwards, and when we look ahead to 2024, we're going to see inflation fall substantially, and you rarely get an opportunity to buy bonds with these kinds of real yields in them.
I know you are walking right into it.
I am well aware of that. Yes, indeed.
So isn't low inflation already priced into the market? Like it wouldn't. Do you think that the 10-year yield is where it is because it thinks the CPI is going to be 5% instead of 3% next year?
I think that when we look at where the CPI is going to be next year, it's going to be somewhere between, by the end of 2024, at 2.5% to 3%. That's
versus where do you think the market is?
Well, the market thinks, it's going to stay probably around 4% based on where we are right now. But what's clear is that the last remaining part of inflation, which is related to real estate, is what's going to come down next year. Mortgage rates, which are unusually high.
But everybody knows that. Or, I mean, we've all seen the data, right? That's my question is why, because what I'm really trying to figure out, which is what we've all been, why are bond yields so high, right? Are there just enough people in the market who don't, believe that it's going to go that direction?
That is exactly right. I think that's the huge debate, right? You have a whole bunch of people.
And again, what he says here is a really good point. The reason bond yields are high is because even though we see the disinflation data, there's a certain segment of the market that just does not believe it. And that's what makes a market. You got buyers and sellers on both sides.
People who believe that inflation is going to be persistent and that it is simply, embedded into the economy. And when you look at it, and a whole bunch that aren't. And the other thing I would also say is that there's a huge amount of cash on the sidelines. The average ultra high net worth investor has 15 to 20% of their money in cash. They're sitting there taking the short-term view. They're piling into notes, piling into short duration treasuries, and they're not looking at where else they can move their money. And it's one of the biggest calls that we have right now. It's sort of like I say to people, you can get 5% for 6 months, or you can get 6% for 5 years. Which should you do?
Where are you getting 6% for 5 years?
Well, obviously in corporate bond markets, not in the treasury markets. But that's my point, is that people should be moving out in duration right now to intermediate or longer bonds. And in order to do that, you have to believe that inflation is going to normalize.
But the average household might be, okay, if you have a financial advisor or you're ultra net worth, fine, you can buy corporate bonds. But for everybody else, they're probably just saying, well, treasury market's a pretty good proxy, and I'll take that, and maybe I get, 4.5, not quite, instead of 6.
Right. And again, I just don't see a whole lot of people buying intermediate and long duration bonds. That's really what's taking place. And so, it really is the debate on inflation. And I think the data is unequivocal that with the exception of real estate, which is going to be the lagging impact, you'll have lower inflation next year.
A lot of money left to spend.
A lot of.
And so I kind of take the same view given some of the data that I'm seeing. Let's go to Trueflation right now. Outside of real estate, we are headed to below 2% inflation, or sorry, at 2% inflation. But the question is, when are rents going to be able to stabilize in order for this to be able to happen? Trueflation actually ticked up from yesterday, 2.43 to 2.5%. So we are seeing a little bit of an uptick there. You see it right there. We were at 2.14 August 11th. Now we're at 2.4. If we go to Brent oil, I always thought naming it Brent was so interesting. I don't know why it's called Brent, but Brent sounds like a rich kid from Los Angeles. Okay, Brent last day. So here we go. It's up 1%. If you go over the 5 days, it's down 2%. Go over 1 month, it's up 7%. Over 6 months, it's up 5%, kind of normal. And up year to date, it's up 6%. So over the past couple of days, it's normalized a little bit coming down. And we don't see oil in the 90s yet, which is good. But it is normalizing just a little bit. And hopefully that doesn't tick too much higher to be able to see where it goes. Will you buy Hims? I am not fully sold on Hims yet. I like the valuation and I like the product. I love the growth, obviously. I am debating if their moat is around marketing or if their moat is around product. That's why I've not pulled the trigger on Hims, actually. Again, their growth, they're growing like 83% year over year. The valuation does look stupid. However, that's what I'm still debating, and I'm trying to understand that a little bit more. Is like, is it just fancy marketing, or is it like an actual subscription service that is essentially it's an e-commerce brand, right? It's an e-com brand, and you got to bet that they're just going to be able to grow their e-com margins substantially, which I think they'll be able to do. But I want to know what some of the headwinds are to Hims. Again, it is a growth company, and they're not profitable. And in this environment, I just want to be a little bit more careful. Now, 2021 me would have been like, yep, I'm buying it immediately. But I've gotten a little bit older, a little bit wiser, and so trying to have a better understanding for what that's going there. Hims has no moat. Amid test the product. No, I've not tested the product yet. There should be lots of growth with Hims. Get it? Kenneth, you my type of humor. I love it. My type of humor. So Hims below $7 right now. Apple 176, Disney 86, Palantir 1512. No major news on Palantir over the past week. We did just get earnings last week, so still recovering from all of the earnings. Look, we haven't fallen substantially from earnings. I know we fell from like 18 to 15. I get it, but at 18, we weren't expected to stay at 18, $20 for that long. I kind of thought, we might be at 12, 13 by now. But we're holding on at 15. It's not as bad as I thought it ultimately would go. So Palantir not doing the worst. The NHS contract, I believe I saw a picture yesterday that says September 28th. That's when we're getting the answer. So in about a month and a half, we should be able to get the answer. And we will know. Again, I'm bullish. I think we get the $611 million contract. However, if they split it up and Palantir only gets a part of it, I think that's a real possibility. It would suck if that happens. I mean, at least we would get some money out of it. But to me, the contract's not even about the money. S&P now at 441. Let's check the NASDAQ. To me, the contract is about the ability to say we manage the entire country's healthcare system. Like that to me is just like, that's cool, bro. That's like not Snowflake's not doing that shit. 13,501 right now on the NASDAQ. I shared a couple charts on Palantir yesterday on Twitter. One of the interesting things about Palantir is they have 38% year-over-year customer growth. They only have 421 customers. They're going to do $2.1 billion in revenue off 400 customers, which is pretty insane. I mean, that's just honestly incredible. You got a company like Snowflake. I think it's going to do 2.6 billion off of 8,000 customers. Obviously, different business, different model, different product. But for us to be able to do almost as much as Snowflake, not really, but we're still in the $2 billion range off of 1/10 of the customers, or less than 1/10 of the customers. It's pretty interesting. I mean, at any level, that shows you the product itself has a moat that is hard to be replicated if it can pull up $2 billion off of just 400 customers. So it was really interesting to kind of look at some of those charts yesterday as well. SoFi now at $8.34, Palantir 1509, Target 130, Tesla 222. Again, those price target cuts have not helped Tesla's in terms of its stock price. I read a lot of analysis on it yesterday. I'm still convinced the price cuts make a lot of sense. I mean, at the end of the day, if your competitors can't cut your prices like Tesla can and be able to survive, given their margins go negative, whereas Tesla still remains 14 to 15% margins, this makes all the sense in the world. I mean, I don't know anyone criticizing this move. You'd rather sell the car than not sell the car, right? And at the end of the day, I mean, like if you take a purely long-term perspective on Tesla, if it's a software company and FSD is what creates the margin, then the fucking, like, it doesn't even matter the margins on the car. Yes, it matters for Wall Street because they're going to get annoyed at it. But in 5 years, if Elon says FSD solved by the end of next year, it really doesn't matter. The car should be given out for free. It's a loss leader to be able to really make 80% gross margins on the software for FSD. So I think it makes all the sense in the world for Elon to be able to do what he's doing and get to kind of what he needs in the context of selling more cars at the end of the day. Amid 300 by the end of the year. Look, it might happen. If the S&P rebounds to 4,800, which is that range that Tom Lee is kind of predicting, then that would be I mean, I could definitely see Tesla 300 if the S&P gets to that level as well. Palantir falling just below 15 at $14.99. SoFi at $8.32. Truist taking a beating today at $29.04. I think a lot of the regionals that are taking a beating, they're getting swapped up by these hedge funds. I've watched a couple of different hedge fund managers yesterday on CNBC basically saying, look, we're buying the fucking regionals. Everyone's stupid for thinking the regionals are going to die, especially these super regionals. Truist is the 7th most of deposits in the United States of America. Barely any exposure to commercial real estate, 8%. I mean, there are certain opportunities that are going to present themselves. They're going to be really attractive, but it's just a question of when those actually pop up. Snowflake now at $149.18, and Meta at $294, recovering just a little bit. Duolingo taking a nasty fall from 161 to 128, but Duolingo is now at 127. All right, ladies and gentlemen, we are getting to that point of the stream where we have a special guest who has decided to join us for the day. The guest who will be joining is Ms. Gunjan Banerjee. I will be putting her Twitter in the chat so you all can follow us here. Thank you, 673 people, for showing up today. This is someone who has been on a lot of mainstream media outlets, so it's been really nice for her to decide to come on to my little stream here on YouTube and talk a little bit about macro and markets. Gunjan, thank you for being here.
Hi, thank you so much for having me. I'm really excited to be here.
Awesome. Yes. So first of all, I want to say again, thank you for being here. This is super exciting for us as a, small finance community on YouTube. Obviously not like the big leagues in terms of major media, but it's super fun to have someone like you who's been a Wall Street Journal reporter for a long time actually show up on the stream. So I want to discuss a little bit about macro and markets. First question for you, and you've talked about this a lot in some of your pieces, is that a lot of the rally this year on the S&P, I think up 15% of the year, has been because of the Magnificent Seven, NVIDIA, Tesla, Amazon, etc. My question towards the end of the year is, do you think the rally for those Magnificent Seven is able to hold, or do you think we have a rotation to the small and mid caps because a lot of hedge fund managers just feel like the run is the run for Meta? It's up 300% from the November lows, and there's not too much more that it can go for the rest of the year.
It's such a good question, and it really does feel like we're at a turning point right now, right? With bond yields at some of the highest levels since 2008. So I think that's leading a lot of people to wonder, one, what does that mean for the broader stock market, but particularly tech, which does seem to be more sensitive to rising bond yields. And I also think a lot of this hinges on NVIDIA earnings next week. What does that tell us about this AI boom this year? Stocks that have benefited from the AI frenzy. I think that's going to be a real test for that sector. But already the past few weeks, I think we have seen just a little bit of broadening. And I was looking at the different sectors early this morning. Energy up 2%, financials up, well, just a little bit, 0.1%. But we are starting to see some of that broadening in recent weeks, I think.
In your career as a business reporter, when you saw the NVIDIA spike in March, when it went from like 300 to 400 after hours, what was your raw reaction? Have you ever seen anything like that?
It was insane. I don't think I have seen anything like that. Well, actually, let me take that back. The NVIDIA pop was crazy, but to be fair, we have seen some huge moves in the FANG stocks, right? In Tesla, the past 2 years, I'm thinking of August 2021 for Tesla, when that gamma squeeze was in play, right, and the stock just kept ripping higher and higher and higher. I think the past few years, we have seen some of the biggest moves on record for mega cap tech. Last year, it was moves lower, think Meta. This year, it's been moves higher. So I think that again is what makes NVIDIA earnings next week so interesting, not just for AI, not just for that stock, but for the broader market as well.
Right. Okay, now Gunjan, although we've had a massive rally this year in the market, we've got 5.5 trillion dollars that are on the sidelines. Can you give any explanation for why you think all of these people have their money on the sidelines, and what catalyst do you think allows that liquidity to enter into the stock market?
So I think it might be tougher to get people out of those money market funds and get cash off the sidelines and into the stock market than it has been before. And there's one big reason for that. Money market yields recently hit 5.1%. That's the highest level since 2007. And it means this TINA trade, the idea that there is no alternative to stocks, it's dead right now. And that poses a risk to the stock market. And I think you're seeing people contend with that right now, where all of a sudden there are really safe and alluring places to park your cash that aren't the stock market.
Yeah, and it's really interesting. The idea that you could get 4 or 5% risk-free from the market versus having to take a bet on a company like NVIDIA to beat earnings. It is definitely attractive for a lot of people, especially in a market where people still feel inflation has not been solved. So speaking of inflation, do you think inflation is sticky enough to keep the Fed to continue to raise, as per the FOMC meetings yesterday that were a little bit more hawkish in terms of the minutes? Or do you think the Fed knows their job is done and they just want to make sure everyone also feels that inflation is getting quelled, but they don't want people to be overly excited. And as a result of that, they want to keep expectations low.
Well, for one, Amit, that's right. This is a really big shift from what we saw the past few years in terms of getting a return on risk-free assets or the safest assets around, right? Whether it's treasuries or money market funds. I think what the market is telling you, and the big trade this year has been a bet that inflation is going to keep falling, although very slowly, right? It seems like the soft landing trade has been all the rage this year after months, if not years, of fears about a recession and that hard landing. We saw, Wall Street take a really big U-turn on that.
Right.
So for now, it seems like investors do seem to think that inflation will keep falling, although at a slow pace. The one warning, of course, is that it feels like everything we thought we knew about inflation has proved incorrect the past few years. So there's definitely room for some curveballs to be thrown our way.
Yeah, this is the first time in my life I've been old enough to experience what 9.9% inflation feels like in June 2022. And I didn't even know the impact that would have on the market, because I was oblivious to what inflation really does. But now as I've gotten older, I'm like, oh, this is not that good. So we want to keep getting this down a little bit more.
We all felt it, right? I think everyone did when you were buying, airplane tickets, food, Ubers, everything. But it does seem to be getting better, and that's good news for the economy.
Absolutely. All right, my last question, Gunjan. Again, thank you so much for joining us. This really means a lot to us. We have about 673 people that are here, excited for you being here today.
Mm-hmm.
You were in a Netflix documentary called Eat the Rich. Now, I didn't know you were in this documentary. I watched it, I think, a year ago, and then you popped up. And I'm like, that's Gunjan. She's from the Wall Street. And so you were there. And so it was super cool. Obviously, what happened in 2021, I think, even gave the foundation for someone like myself to have a bit of a presence on YouTube, because it allowed an influx of all these retail investors to actually care about the stock market, which when GameStop and AMC went to the moon. So how do you think investing has changed since 2021? And where do you think retail investing is going to go over the next couple of years, now that really tens of millions of people, at least in the United States, are excited about the stock market?
That's a great question. And I do think there has been a huge shift since 2021. And it's funny, I recently wrote this piece called Lessons from a Bear Market. And it was basically based on exactly this, which is what I think happened, which is a lot of individual investors, a lot of institutional investors too. I mean, I think everyone walked away from this bear market with quite a few lessons. Some investors I spoke with said, look, I'm taking less risk in the market after that big sell-off last year. I learned that maybe stocks over the long term have tended to go up, but there can be some painful drawdowns along the way. And because of that, one, I might be trading less. Two, I might be taking less leverage. Maybe I'm pulling back on the options trading. So many investors I was speaking with were broadly just taking less risk or more cognizant of the risks out there in the markets. Some investors I spoke with have also said that, they are being careful about what they're seeing on social media about investing in stocks, and then trying not to get caught up in like a momentum-based frenzy on individual stocks, which was a big shift. Some said, hey, I'm going to go into ETFs rather than single stock plays. So I think across the board, there has been a huge shift in how individual investors are positioning in the markets last year and this year. And I think it'll be really interesting to see how that evolves moving forward during this rally that we've seen this year.
And do you think the crowdsourcing of information that a lot of retail investors engage into around individual stocks will continue? I mean, we're seeing like hundreds of thousands of member communities popping up on Twitter or YouTube covering one stock. Do you think that continues as more people feel they can get information together versus having to buy it from reports?
It's certainly continued this year. I recently wrote about the rally in stocks like Tupperware or Yellow, and that was based on this crowdsourcing of information. And, one thing for all the viewers out there to keep in mind, I love chatting with individual investors for my articles. So if you're ever interested in being interviewed, or you have something that you want to share with me, you think there's something I should be writing about, DM me. My DMs are open, and I love hearing from all of you. So would love to stay in touch with you, Amit, and for the viewers out there.
Right. And this segment is a exact manifestation of her DMs being open, because I sent her a DM and that's how we did this. Her Twitter is in the description.
It's true.
It's how it happened. It went down in the DMs. Twitter is in the chat. 703 people. Thank you for being here today. Ms. Gunjan, thank you so much for taking your time. It really means a lot to me. Have a great day. Thank you so much.
Thanks for having me. Bye.
Bye. All right. That's it. We did the segment. Thank you, everybody, for joining. This was super, super, super fun. I hope you guys enjoyed. That was fun. That was cool, right? That was super, super, super dope. We had Gunjan on. Thank you, 700 people. We had a great turnout. Thank you for being here. Had to show her, we got a little bit of the sauce on the YouTube finance world. We got 700 people ready to listen to us talk. That was good, right? She was super dope. She was super dope. Amit, you lasted more than 1 minute. Dexter, I fucking hate you. I fucking hate you. That was awesome. No, but I think her insights were really important, especially if no one's seen Eat the Rich, you should watch it on Netflix. Her insights on how retail investing she covered that whole story in 2021. She was like one of the frontline reporters during that situation. That's really the reason I'm here, right? Like if that didn't happen, most people wouldn't be interested in the stock market. So it's really cool to talk to someone who was around that time and able to discuss it. We got to ring the cowbell for this. We got to ring the cowbell. Okay, awesome. So we're going to end it off with the word of the day, and that's how we'll end off the stream. Adam, thank you. June, thank you for being here. Also, let me make one quick announcement. I am going to be in Vegas, October 27th to the 30th. So if anyone is in Vegas, in fact, the entire Finance Junkie crew is headed to Vegas. My birthday, my 26th birthday is October 27th. I haven't drank alcohol in like 3 years. So that'll be the one weekend I decide to drink some alcohol. October 27th to the 30th. It's going to be a fun time. If any people want to come meet up with us in Vegas, DM me on Twitter at @AmitIsInvesting or email akukraja227@gmail.com. And I'll let you know the details. I think we had 5 or 6 people reach out. So it'll be a fun little Vegas meetup for people that want to connect with all of us and kind of keep going from there. So it'll be cool. Okay, the word of the day on Merriam-Webster is volatile. We're not going to use volatile. Volatile, like we all know, we've all been through volatile. I've seen my portfolio be very volatile over the past couple of weeks. Here's the next one: littoral. This is so weird. Littoral. What does this mean? Of or relating to a shore, lake, or sea or ocean. Littoral. Wait, hold on. Literal. It literally sounds like literally, right? It sounds like literally. I have a way to use this word in a sentence that I'm not going to do. It's of or relating to a shore, a lake, or sea or ocean. I'm not going to use it the way I want to use it. So I'll let you guys think of how I would use this word in a sentence. But yes, literal. Of or relating to the lake, sea, or ocean. I have no idea what's the SAT prefix that leads to that, but that's the word of the day. So if you guys want to use that, that's the word. The stock market is in a littoral of red. Yep. There you go. In a littoral of red. Doug says, don't do it. Doug knows. Doug knows. Okay, that's it for me. Thank you, everybody, for joining. Again, if you're interested in Vegas, DM me on Twitter, @AmitIsInvesting, or email me, and I'll send you the details for that. We're probably going to be booking our flights later this week, and so it'll be a fun weekend. And if any fans are in the Cali, Vegas region, it'll be fun to get dinner, meet up with you guys, talk, and keep going from there. What was the last thing I was going to say? Yeah, that's it for me. Finance Junkie is a little bit later tonight, and yeah, that's pretty much it. Thank you all for joining. I appreciate it. We had Gunjan on. This was awesome. First time a Wall Street Journal reporter came on the stream. I think she killed the segment. Super dope. Thank you, everybody. I will see you guys later today. Have a great day. And thank you so much from the bottom of my heart for showing up. This is one that I really wanted people to show up for. So thank you all for that. Really appreciate it. See you guys later today. Bye-bye, everybody.